Hello and welcome to Crux Investor. We caught up with Chris Reed today of Neometals, plus a couple of his team join us for a chat with regards to their 5 projects. We talk about their final investment decisions on 3 of those next year, plus the kind of cookie cutter approach we can expect to see on their Barrambie and Mount Edwards deal, having made a stack of money for investors on their Mount Marion lithium project. They think they can do that again here. If you want our thoughts and opinions on the conversations, join us at cruxinvestor.com/club, where you can also find detailed company reports and analysis. We've got commentaries from experts from around the world on a variety of companies and commodities, especially the EV thematic that Neometals so dearly love. We've got summaries of interviews that we have done, in fact, all of our interviews, just to save you some time, because we know you're busy people, plus training courses. But most importantly, a thriving group of investors sharing their thoughts and ideas with each other in a nice, friendly and safe environment, free from judgment, trolling and abuse. And if you think that sounds nice, and I hope you do, go and join them at cruxinvestor.com/club. And we'd love your feedback too. So give us a like, we appreciate it. Leave your thoughts below. We'll get back to everyone. And if you want to see precisely what we talked about today with Chris and the guys, take a look in the description below. Gentlemen, how are we?
Very well, thanks, Matt. How are you?
Well, surviving, mate, surviving. We've been unleashed here in London. We're allowed back in pubs, restaurants and bars, which I'm then studiously ignoring. Kind of like the gym. I like the comfort of knowing I'm allowed back in the gym and then not going. It's good.
Very good. Well, we wish all of our friends in the UK all the best.
Thank you very much. Well,
enjoy.
Hey, well, I wanted to catch up with you guys because your shares have been on a bit of a tear, which is good news. I think the story's starting to get recognised. And I think, like a lot of sort of the EV themed companies, doing quite well at the moment. But before we do all that, Chris, can you just hit us up with a sort of 1-minute summary of what your business is for people just coming into this space and perhaps haven't heard the story before?
Yeah, sure, Matt. So we're an innovative project developer based in Western Australia. So, we're looking to develop projects for commodities that are exposed to the EV thematic and the energy storage megatrend. So that is the common intersection of our projects. So, we're developing a lithium-ion battery recycling business in Europe. We want that to be the largest in Europe. We're developing a vanadium recovery project. We've got interests in lithium, titanium, vanadium, and nickel that we'll touch on today. But, essentially we're looking at providing these materials to speed up the decarbonisation of the supply chains, which is something every miner has to look at. And so, with our recycling and materials recovery as a real driver, we're trying to supply those critical metals that are needed for a sustainable future.
Yeah, I think the thing that seems to be coming back, certainly from people like writing into us with regards to you, is you're sitting at the end of that sort of supply chain. You used to be miners, but now you're complete polar opposite end there, where you're talking about sort of end of life recovery on the batteries or remediation of mining projects. And does that seem to be the thing that people are talking to you about, or coming to you and saying, well, tell us more about that?
Look, I think that pivot away from the upstream concentrates into developing our end-of-life recycling and recovery projects has resonated well, particularly, over the last sort of 18 months with the trend towards more ESG sort of principles. I mean, we're looking to recycle and recover, they're finite resources. We're looking at reusing them again. We're looking to do them very, very efficiently with a very low carbon footprint and using environmentally friendly processes. So it's really some of those technologies that we've developed for lithium battery recycling, the Vanadium project, that enable the production of these, critical minerals and materials back into the supply chain with a very, very low carbon footprint. It lends itself to, the circular economy, sustainable supply chains, ethical supply chains. So I think really, we just are really being noticed, I guess, for being early starters in the field.
So do you think there's a kind of, you set out having made your money with Mount Marion. You made a lot of money for you and your shareholders with Mount Marion. So, okay, we don't want to be miners anymore. We want to move down into this whole green thematic is going to take off. We're going to move into this, let's say, project developer engineering side of things, right? So you've got various flow sheets which you've come up with on the battery recycling and also the vanadium recovery type stuff. Do you feel that message is getting a little bit muddied by the fact that you're now looking at Barrambie, you've got titanium, vanadium, you've got your lithium projects, you've got a nickel palladium project now. Is it getting a little bit grey?
Well, like I said, we identify opportunities in those commodities. So, we want exposure to the trend. That then distills down the commodities that are most positively impact. And we have either acquired projects at the bottom point of the cycle when when they become available. We're quite opportunistic. With the management team and the board have been in the mining industry for a number of generations. So, we've picked projects so we've either acquired them or developed them internally, right? So we've developed the lithium battery recycling internally. The vanadium project was brought to us but needed a flow sheet that was environmentally friendly because it's up in Scandinavia. And so we developed that it's enabling that to run. I think, in terms of Mount Marion, we developed that into the world's second largest hard rock source of lithium with a couple of multi-billion-dollar companies. We did well, right? And we got out at the top of the last cycle. Then it's gone down because you do have to hold these mines for a long period of time. So we sold out of that. We still retain offtake rights for the mine. The lithium prices have really started to turn and starting to accelerate. Now it would be the right time to go back and have a look at more lithium, albeit that, for us, I think the recycling, you recover nickel, cobalt, lithium at the bottom end of the cost curve. So, do I really need to develop standalone nickel and lithium operations? Recovery, obviously, you save the carbon from the mine. That's where a lot of the carbon comes from, is in the mining of the bulk minerals and the processing and shipping them all over the world. For us, the easiest way to take carbon out of our production base is to simply remove the mines. Now, that's fine. And, if you have a look at what's going to be required in 2030 to supply the gigafactories, even if we recycle everything that's available in 2030, the products that you'll get will be less than 10% of what is needed to feed the gigafactories. Now, that percentage will grow, but that'll be into 2040 and 2050. So you're always going to need minerals, but for us, it's really to get and understand, like, you have a look at the Johnson Matthey guys, they won't get into an industry unless they can recycle. And they understand it. So we understand the supply chain, it's particularly for lithium or lithium-related products, because we've been in it since 2009. So, from the mine to producing chemicals, cathodes, cells, batteries, and now the end-of-life recycling.
So do you think that this sector is doing all that it can? I'm intrigued by the fact that you're concerned over the carbon component, and mining is inefficient in that regard. And we hear lots of initiatives about zero carbon, etc., sequestering carbon. But do you think the industry is doing enough as a whole? Are people having the sorts of thoughts or conversations, or at least asking questions like you are in terms of their processes?
Yeah, look, I think there are some advances being made, particularly, in earth moving. You're starting to look at hybrid trucks, right? I mean, in a dump truck, you got a diesel engine driving a generator, driving electric motors, right, which run the wheels. So there's no reason there practically that you can't get an energy dense battery and replace, burning diesel. But you have to have the power. You have to generate the power. Now, how do you generate the power? So, it's a chicken and egg thing from that point of view. You still have to move the materials, and we're still going to have to. So you have to have a look at the net benefit. You're always going to have carbon, but, I think we're going to have a look. So as an industry, how do you take the carbon out? Okay, we'll have to take it out of the mining at some stage, but the grades are getting lower, the mines are getting deeper, the strip ratios are going higher. So the carbon, we're going to have to fight just to keep flat carbon. So then you have to have a look at the processes to see if we can't do it more efficiently, eco-friendly, and try to remove some carbon. So, for the vanadium recovery project, some of the world's highest grade vanadium grades in these steel slags that have been stockpiled for 40 years. Now, I get fantastic recovers from using sulfuric acid, as you'd expect, but I've got a sulfate tail that potentially can create acid mine drainage. Don't want that. So we developed a flow sheet based on removing carbon from an industrial emission, capturing the CO2 and sparging that in to a solution and creating a carbonic acid and actually dissolving the vanadium in a carbonic acid, which we can do with this calcium-rich slag. So, we will actually sequester about 65 to 80,000 tonnes of CO2 per annum from that project. And so that's the hat that we've put on. It just helps your social license.
It's interesting. So you're willing to give up some margin to do it the right way and be seen to be doing it the right way.
Well, I think, for example, if you have a look at South 32 the other day, they're going to pay or provide cash to get out of their profitable coal mining assets in South Africa because, I don't know, they've made that strategic decision to do so. That'll no doubt remove carbon from their company footprint. But, we would trade off those higher recoveries for a more sustainable business. Like, am I going to run into permitting issues there? Is it great for the communities? So reinventing some of those flow sheets is how we're going to hopefully make some alpha, and become more sustainable in the long run and have a more symbiotic relationships with the communities that we operate in.
See.
When we had a look at the lithium battery recycling, we've been at pains, not only driven by high recoveries and high purities, safety is the number one priority, right? Because obviously, lithium batteries do have energy in them. And then, we've been at pains to ensure that we don't emit any NOx into the atmosphere, maintaining a negative water balance. The choice of pH adjusters for us led us to use ammonia, which means we get an ammonium sulfate tailing. So essentially our tailing product out of the battery recycling, the biggest volume that we produce is actually fertilizer, So you got to think of it. We've got to look at things in a new way, in a new light. If we're going to, run a long-term sustainable business. I mean, this year we turned 20. We've got to prepare the business to run another 20.
It's interesting. It's an imperfect business, but we need the stuff that's in the ground. And my question to you was around economics. So you're saying that basically doing things the right way is not mutually exclusive from profitability.
Oh, you got a profitability over what period? I mean, seriously, could I drag the samples to some, other part of the world with less vigorous environmental? You probably could, and make some more margin. But really, the resources are in the countries where they are. You want to do them in the most sustainable way. Life starts when you get a job. You want to create jobs. You want to benefit the communities that you're operating, and you want to be there for a long period of time.
Hey, Jeremy, you put together a little ESG package for the company. Do you think that the company has absorbed that? This isn't just a gimmick to go out and get cheaper money from funds or pay attention to funds. You think that the company is taking it on board and it's all pervasive throughout the company, or do you think there's a bit of work to do still?
There's definitely work to do because year on year the intention is just to keep building on, what we put in our first sustainability report. But absolutely it's pervasive because the projects that we're operating on, there's two elements to why they're interesting from a sustainability perspective. The first is we're looking at generating or producing materials that make clean products. And a lot of people can say that if you're into nickel or whatever, you tick that box. So we satisfy that. That's the easy bit. The hard bit is what we've been working on for years, which is by virtue of some of these projects, particularly the ones in Europe, you're reducing carbon footprints of, the entire supply chain. You're remediating sites. You're sequestering CO2. So we're actually physically doing it. We can't get any closer to ticking the ESG boxes. It's our basic modus operandi.
Is it a case of? Sorry, Darren. I just want to ask this question because something Jeremy said there was like you're talking about doing it clean, but given it's an imperfect sector in the sense that you're digging stuff up, spending a lot of money to dig stuff out of the ground as an industry, it's about doing it cleaner, isn't it? You can never be clean. You make that claim because I think about some of the people who object to mining. They don't necessarily want people digging holes or drilling holes to go and find the materials to build the stuff which they use every day. So there's got to be an honest conversation between both groups, haven't there, in terms of objectors and the miners?
For sure. Darren, why don't I start with an answer, and it sounds like you can finish it for me. But in terms of digging holes and drilling, I mean, I'm a fairly green person myself, but you can't have stuff without minerals. We're trying to complement the requirement to dig more stuff out of the ground, but you can't replace it. But our intention is to do it smarter and try and do it sustainably and ethically where possible. And I think our core message is that we've actively pivoted away from upstream minerals, particularly our reliance on digging holes in the ground, but we haven't done away with it. If we're to be clear on it, we're still exposed to minerals and exploration, but to a lesser degree, and we're heading in the direction of, a complete reduced reliance on that. So it's in transit. We're getting there step by step.
Yeah, if I could add to that about the all-pervasiveness of the ESG thematic, 3, 4, 5 years ago, I wouldn't have even contemplated CO2 footprint in any of the work I was doing. It wouldn't even come into my mind. We are now evaluating options. For example, the Vanadium recovery project. We come up with new ideas on how to look at the project, try and improve upon it. The first thing I do is ask the guys, what impact is this going to have on the carbon footprint? And we are actively sometimes avoiding some technologies and ideas just because of the carbon footprint. And that wasn't something I even contemplated a number of years ago. So there's a real big change in how we think. Well,
it seems to me from some of the companies we speak to, they're still where you were 5 years ago, and I think that's the problem. It's the industry just kind of needs to move things forward and just do things differently. So I can congratulate you guys. Can we talk about the 5 projects you guys have got? And I think that people are slightly overwhelmed with the amount of information they need to understand about you guys, in the sense that you've got your European initiatives and then you've got these mining options as well. So maybe, Chris, can you just sort of help us understand where you're at with the different projects? So I think that the most well-known is the battery recycling project. So where are you guys with that? And also in all of these, give us a sense of timing as to when when decisions get made, when production happens, what could people be looking forward to?
Sure. So our lithium battery recycling project, that's being commercialised in a joint venture with SMS Group, who are one of Europe's leading engineering houses. So we own it 50-50. We've brought along the IP and know-how. They've brought along their plant construction skills and operation skills. We're currently building a demonstration plant at Hilkenbach in Germany. The front end of that plant will be the largest capacity in Europe. We'll run it at it's permitted for a tonne a day. So, we've got feedstocks that are being supplied by German car makers and stationary energy storage battery producers. So we'll run trials. So we're going to commission that demonstration plant this quarter. We'll finish the demonstration trials in July. We will then look at completing a Class 3 engineering cost study by the end of October, feasibility study end of December this year, and look to make an investment decision in the first quarter of 2022. So under the joint venture with the Germans, we are looking at they will build the plant. They can operate it and maintain it should we choose to. And they, on a best endeavours basis, are responsible for procuring 50% debt financing, and they are the second largest generator of German government-backed KfW loans. So we're very, very happy with SMS's performance. It's been exemplary. You can see from our social media, if you follow Primobius on Twitter or LinkedIn, you will see regular updates. And as you would expect, it is a state-of-the-art piece of German engineering. And Jeremy can now comment on some of the progress that the commercial team has made. Certainly the technical stream, fully funded through to that FID and on track.
Before Jeremy, you jump in there, just you talked about a ton a day now for the pilot plant, but what's the scope or extent of the full commercialised plant? I mean, I want a sense of scale.
So stage one for our commercial plant is, our first commercial plant is a 20,000 tonne nominal capacity. We have a 20,000 tonne shredder, tonnes per annum capable shredder at Hilkenbach, which is SMS's manufacturing headquarters. And that's designed to take the production scrap and off-spec material from a gigafactory. We'll then look at stage two, scaling that up by a factor of 10 to take the end of life, because in the cell making plants, typically, a steady state scrap rate is about 10%. In the early years, they're 20 to 30%. But we have to plan to accept the other 90% back at end of life. So, we do our engineering studies on both a 20,000 tonne per annum rate and a 200,000 tonne per annum rate.
Wow. Okay. Thanks. Sorry, Jeremy. Where are we at with the commercials?
A high-level comment on the commercials would be that Chris just gave you an outline of the timetable. So, very roughly, we've got this demonstration facility being built in Hilkenbach, Germany, and it's twofold. Firstly, we need to scale up the technology, and we're busy and very prepared to do that. We'll collect the data to go into feasibility studies to optimize the kit, essentially. But the second part that relates to the commercials is it's a showcase for us to show OEMs and other stakeholders exactly what we're doing. They can come and visit it in the heart of Europe. And ideally, we get feed material from potential partners, and then we shred, refine the materials and give the chemicals back so that the value chains of these companies can evaluate, whether or not they want to buy them and enter into offtake arrangements. So we're really busy on that front. The demo plant itself has well in excess of what we need to run the trial, all donated from potential partners and stakeholders. But importantly, for every material that we make, and some are low value, plastics, copper and aluminium foil, etc., and steel, and the high value chemical products, we've got evaluation agreements in place so that every one of those materials is spoken for, and somebody or multiple parties are evaluating them for the fact that come the end of the year, we have to go into a financial investment decision with confidence. So we need to know where the feed's coming from and who's going to buy it. And we're busy and having great progress, I think, would be my comment.
So you guys are getting focused on what you determine as commercial. I think the market wants a sense of when do you know and when can you tell us how much money is this thing going to make?
Sure. We'll be able to give you an idea when we put out the engineering cost study numbers, which will be completed at the end of October for a 20,000 tonne plant. Now, if you'd asked me last year what the biggest risk for the project was, I was sort of, we're in COVID and I'm sort of wondering, how am I going to get the feed? But, in the intervening period since we've incorporated the joint venture, we've signed an MOU with a cell maker based in Eastern Europe. We've signed an MOU with a battery manufacturer and industry heavyweight, Itochu, in Japan. And so not only of our own ambitions, because 60% of the mega factories will be going into Europe at this stage, into Germany, of the capacity that's going into Europe. 60% going into Germany. So hence looking at a dedicated German plant, a second one most likely in Japan to start off with the Tochu, if that gets to fruition. And look, the Japanese have been producing lithium batteries longer than anyone on earth. The Panasonics of the world are the original suppliers into Tesla and stuff. So there's, quite a decent volume of production, scrap and end of life in Japan. We'll then have a look at other countries in Asia, ex-China, with the guys at Itochu. The cell maker in Eastern Europe, we're actively looking at developing relationships with OEMs, not only both in Europe, but also in North America. I think that's one of the beauties of having SMS there as plant builders as your partner. They're not there to build one 20,000 ton plant. They're there to build multiple plants and very, very large plants where they can in any geographic location. I mean, SMS, 150 years old, 14,500 employees in 95 sites around the world. Our customers can rest assured they will get a state-of-the-art piece of German assembled equipment built and operated and handed over. And to whatever scale and speed that they require, So, we are very fortunate in having SMS as a partner.
So I just got to ask about competition, right? Because if this, these ecosystems in Europe and Asia and North America happen, they'll kind of want their own guys on the ground. And you're going to have to compete with them, financially and technically. What gives you the edge? You've kind of got a first mover advantage here. Is that going to be enough?
Yeah, look, we do have some competitors. It's probably some of the better known competitors from the sort of pyrometallurgical world, which is sort of old hat, but, it does reduce the amount of carbon vis-a-vis making materials from fresh mineral concentrates. But, we have a look at what's required in these new European battery regulations, and, it's really pushing everyone recycling mandatory. The recovery rates you can really only achieve in hydromet. Our process, as I said, is very, very safe, very, very high recoveries. We're achieved over 85% recoveries. I think the highest in the regs is about 75%. Low carbon footprint we expect. If you look at making a ton of batteries out of mineral concentrates, about 8 tonne of CO2 per tonne of batteries. If you pyromet, it's 4 tonnes. If you're doing hydromet, we expect to land in the 200 to 300 kilo a tonne range. So stripping 90+% of CO2 out of the footprint is good. And so the product qualities, our nickel and cobalt sulfate, which 85% of the revenue base already exceed the specs required for use in cathodes in China. We'll make some improvements in the demonstration plant there. And so in terms of, what is required for regulations, we think we've got a best of breed solution. We've got a very flexible business model. We can look at providing a service. We can look at, joint ventures. We can have a look at licensing regimes, so we've got whatever the customer needs, we are there to provide a service, and we think we've got many unique selling points. I mean, some of our competitors, there's not that many that are in the public arena. Actually, the Lysical guys have probably got a flow sheet that's reasonably similar to ours. They got bought out for $975 million in a SPAC deal. They got 2 5,000 ton shredders and a 1 ton a day pilot plant. We've got a 20,000 ton shredder and a 1 ton a day demo plant. So, I would say they're 4 or 5 months ahead of us in terms that, they're creating black mass and selling that. But, I think, with SMS, we've got a capability to build many. I mean, they've got 14,500 employees, right? Europe, apart from the EV world, economic activity in Europe means that there's probably plenty of latent capacity to build plenty of plants. So, we're very, very much looking forward to the future.
Can you build that out without diluting your current shareholders?
So look, for the first plant, if we were doing it as principal, we've got that capability to fund that off our balance sheet. we expect that the interest rates from either a German government-backed KfW loan, in Germany they've got a 30% capital subsidy for projects in these fields, which is just fantastic. And if we're doing joint ventures with cell makers and guys like Atocha, they'll be able to finance their share of whatever's required. And so, from a positive final investment decision, we look at turning these plants on within a 12-month time frame, and they're very, very robust. We have in our presentations, if you have a look at LCO batteries, consumer electronics, about $13,000 of recoverable metal at spot prices, down to 811 NMC batteries, about $5,500 a ton, and our published costs. I think the last time we put out some numbers was $1,600 a ton for operating costs. So very, very healthy margins, and so they're just very, very robust. At that point, you just try to find as much feed as you can. But we're acutely aware that, we may be in a position where we need to fund the construction of more than one plant.
Okay, well, I guess we'll know more when you know more. I want to move on because I do want today to talk about all 5 projects, just give people just in one place update on these things. So battery side, battery recovery, going well, lots of deliverables, looking forward to investment decision. Vanadium recovery, so another green initiative here. I mean, what's happening on that front?
Sure. So look, from a very high level, we are earning into a 50 incorporated joint venture to process approximately 2 million tons of steel slag stockpiles that carry somewhere around 4% V2O5, vanadium pentoxide, which is some of the highest grades I've ever heard of, and you don't have to develop a mine. They're already on the surface. So at the moment, we've been through a very, very vigorous evaluation process. We don't take shortcuts. So we've done lab scale test work, and we did a scoping study. We then completed continuous larger scale test work for 100 hours. And then we are currently doing a pre-feasibility study. The engineering cost study numbers, have just come out. You will produce vanadium at the bottom end of the cost curve. In the battery recycling, you produce nickel and cobalt at the absolute lowest. But for vanadium, you're in the bottom quartile. So, we are really embarrassed. It's an embarrassment of riches, these 2 projects. It's very seldom do you get projects that can genuinely, because of the high grade nature of the feed, operate at the bottom points of the cost curve. So pre-feasibility, so engineering cost study numbers are out. Looks fantastic. Exactly what we thought it would be. Pre-feasibility and financial model out later this quarter. We are constructing a pilot plant. We've got 45 tons of sample. We'll finish that in early July, and then we'll move straight into a bankable feasibility study. Finish that by June 30 next year, and then look to make an FID in the 6 months following that. At which point we prepay for a big slug of those really, really high grade stockpiles and start building a plant.
Right. So
in terms of production by the end of 24.
Right, so relatively near-term production. Can you tell us a little bit more about the numbers other than bottom quartile in terms of cost? Is there any sort of sense around the economics of what this could mean for the company? Again, for shareholders,
I'll hand this over to Darren.
Yeah, okay, Darren, come on then.
Yeah, sure.
Well, it's his project.
Well, yeah. As we said, the engineering cost study numbers are out, and we're really happy with that. We've had the work was completed by Hatch, a very good quality international engineering firm. And, we're roughly in alignment with the work from the earlier scoping study. So we're sitting at around about US $4.25 a pound OPEX, which, as Chris says, is lowest quartile. So really, really happy with that. And I think most importantly, CapEx wise, we're sitting well under the US $200 million level, sort of circa US $184 million CapEx. So really happy with that. That's an imminently financeable project as a CapEx and lowest quartile OpEx. So looking forward to running the NPV numbers in the coming couple of months.
Okay, excellent. Okay, that gives us a set. We can work some numbers out from that. So those two projects are the kind of flagship projects, the nearest term in terms of nearest revenue and furthest down the line. I want to talk about some of the other projects which are sort of following up. And this is where we get into that kind of mining territory again, I guess. You've got lithium, titanium, more vanadium, and I think the exciting press release of recent time is around the nickel and palladium. So I might start with Mount Edwards if I may. Those are some pretty nice numbers. Were you expecting palladium in there?
Look, we know that there's a common affinity between platinum and palladium, PGEs, with nickel ore bodies. We had traditionally used them as a geochemical vector in on where there might be decent nickel mineralization. And so, out at Mount Edwards, we've got 8.7 million tonnes of resource at about 1.7% nickel for 146,000 tonnes of contained nickel in 11 nickel sulfide deposits, 50 kilometres from BHP's 2 million tonne nickel concentrator that's currently on care and maintenance. And so, 47 granted mining leases, great, more than 300 square kilometres of tenure on the main road, rail, with access to all the infrastructure we need. So, that's a bit of a blessing. So what we've found is that from one of the northern deposits, Armstrong, which from our mining studies was probably going to be first cab off the rank, we did some cider test work to see what concentrates we could make. So, a mining engineer went up there, he's grabbed a couple of scientifically taken some samples to achieve the desired head grade, brought them back, we put them in 2-3 minute floats. So not they just call them roughers, so not detailed, just with RC chips that had bloody drilling fluids on them. And what we found out is that there's significant palladium and precious metals in the ore, and it was reporting to concentrates. So you mine it for nickel, and then you get these potential significant co-product credits of palladium, platinum, and gold. So for the first time, we discovered that you can actually recover the platinum and palladium. We didn't actually know it was in those sorts of grades. So, we've gone back into the statistics, and we've got a database of 422,000 drill assays from 1968 through to 2008 when mining stopped. And only 10% of those were assayed for platinum and palladium. And the majority of the resources were done by Western Mining. So in Western Mining disposed of the project in 1997, they'd taken more than 380,000 samples. Do you know how many were assayed for platinum and palladium? 100. So within those resources, we've got practically 75% of all the assays that are greater than 1% nickel. Only less than 25% of them have been assayed for platinum and palladium, and the majority of those were all Western Mining resources. So, now we have to infill drill to increase the inferred to indicated, and actually to ascertain what the correct grades of platinum and palladium, because even the modern guys that explored from 1997 through to 2008 and submitted about 42,000 assays, they used to use a 1 gram per ton or 1 part per million top cut, which is crazy. So, it's where you're going to find it. And whatever you find, platinum and palladium, that reports inside those wireframes for the nickel ore bodies is going to end up in the concentrate. And, we've had approaches from a couple of commodities traders, and we're going to get some pretty healthy looking co-product credits.
So how do you play this, Chris? Because you've got optionality everywhere across your portfolio, right? And, the project generator or project developer model, which was great. And I understand the engineering components around, battery recycling, vanadium recovery, etc. you've got a track record with Mount Marion. You know how to create value on mining projects. Where do you go with this? Because, Palladium and Nickel are very topical at the moment. Your grades are great. You're going to be attractive. But how far down do you drive this project before you kind of want someone else to kind of step in with their balance sheet?
Yeah, look, I think in the last year we've been pretty consistent in our messaging that we're reviewing the most appropriate structure to realise value for our shareholders. And, it's hard to see its value being reflected in the share price other than announcing the platinum and palladium, which the market cap picked up 25 million. But I would say it really needs, because there's a dearth of peers of genuine advanced nickel resources that have got a very, very clear ability to be monetized. And you don't have to build a concentrator. There's a number of concentrators in the Eastern Goldfields, which is where we're located. And so, I think the value uplift, we're getting a discount for that project being hidden inside Neometals. And for me, however that looks, it needs to be an independently resourced it needs a dedicated team that are nickel developers because it's a production story. We were doing mining evaluation studies, and the metallurgical test work as part of those mining evaluation studies has thrown up such a massive curveball. We've just had to stop and say, well, we can't possibly plan a mine because we have such a big step change positively in value of the mineralization that we're going to mine. So, I mean, what a quality problem to have.
It's a great problem to have. But I'm intrigued. Do you spin it out and retain the ongoing value for that?
We're going through that process. If I had to look at timeliness, the consistent thematic with the materials. I mean, clearly they've got a link there, EV materials and transport materials. There's no doubt about that. But, they are further upstream. They need a different skill. They need to be staffed up separately. Our recycling and recovery is much less carbon intensive. And in the case of the vanadium, it's carbon negative. And so, but there's significant value for the shareholders. So the board are going through that process, and I expect that we'll have some clarity, certainly on the best way to develop the Mount Edward value. I mean, we bought it when nickel was unsexy at $12,500 a ton. We've invested 10 million into it, and now it's one of the largest nickel holdings, and I would say probably one of the most prospective for PGEs in Australia. You already know they're there. They're there north and south, 50 kilometres of strike in all of the deposits to varying levels. And we've just got to find out. I'm so keen to find out.
Yeah, no, I get you want to go after it on a fundamentals basis. You want to understand how you do this thing properly, how it becomes a mine, and not go, mining the market with headlines. Although you've seen how people react when you mention the word palladium at the moment, or nickel, certainly with grades like this. It must be tempting to try and do something sooner rather than later. The fantastic bit is
it exists in the nickel ore body, and whether you like it or not, it's going to report to the concentrator. And if you're smart enough and you get a back end solve that you like, you're going to pay. You've got the ability to pick up some significant coin.
Okay. I will wait with bated breath and see how you play that one. Let's talk about Barrambie. It's been on the books for a while, slightly unloved in the background, but you're stepping things up there. I mean, what are you up to?
Yeah, so look, we've recently announced a cornerstone, an MOU for a cornerstone offtake agreement to get the project into production. In evaluating the best way to skin the cat, Barrambie is the world's second highest grade hard rock deposit. Behind Rio Tinto's Lacteo. It's a behemoth. We just don't have cheap hydropower in the outback in Australia. And so our very, very smart metallurgists and consultants have come up with a way for us to make a mixed gravity concentrate. We can either downstream process that to produce, high quality ilmenite and iron vanadium concentrates. And we've had some success in incorporating the mixed gravity concentrates into the production of titanium slag. So, titanium is just one of those beautiful building blocks of the modern industrial world. The more developed a country is, the more intensity of use of titanium. And China produces half the world's titanium and consumes half the world's titanium feedstocks. And so, the mineral sands and the high quality mineral sands are running out. And so, the benchmark prices are pretty much set by the guys that convert hard rock concentrates, be they Rio Tinto or the Chinese domestic market. So, we're looking at, a capital light startup. So mining, crushing, grinding, simple gravity spirals to make a gravity concentrate, and to truck that out of the port of Geraldton for sale to third parties. And, we're really delighted to have a leading titanium slag producer in Zhuxing, who is looking to take 800,000 tons of mixed concentrate, which is just fantastic. And, the beauty about Barrambie, we've had it for 17 years. We have, a very, very large resource, very, very high grade. We've got a granted mining lease. We've got a granted mining proposal to mine up to 1.2 million tonnes per annum of ore, and we've got ministerial approval to construct a concentrator up to 3.2 million tonnes in size. So, mate, it's shovel ready.
It's shovel ready. So tell me more about this offtake. I mean, what does it mean in terms of cash for you today to contribute towards getting this thing moving? What were the terms?
Yeah, so look, on the revenue side, so we're looking to get paid benchmark prices for this, with a floor price based on actual delivered costs into China plus a fixed margin. So it's how we approach developing Mount Marion. And so when we sign the binding agreements, we will disclose the full commercial terms. So that's the revenue side of it. On the other side, we're looking to procure, a build, own, operate proposal from mining service providers to essentially develop the mine, build the plant, and to operate that on our behalf. And they obviously will share in the economics of the project. So, similarly that we did into Mount Marion. So, the MOU contemplates an evaluation. We're going to mine at least 200 tonnes, which we're fully permitted, of ore. We're going to process that, make gravity concentrates. Some will make into ilmenite, some will make into iron vanadium concentrates. And we envisage entering into full form agreements in January next year after a very, very, we're going to supply these guys with 100 tonnes of con, and we've got to mine. It's going to take us a few months. So we're targeting a binding formal agreements by the end of January 2022, and binding build, own, operate or mine to port solution contracts with mining service providers a couple of months following that. So, all things going well, we would be looking at an investment decision in the June quarter of 2022. Okay.
And just on I know you're going to tell us the terms, but are you getting any cash up front? And if you're not, have you got the money to be able to get things moving?
Well, that was the beauty about Mount Marion. We managed to build the world's largest greenfields lithium concentrator with no upfront money and a stage sellout. So, at this point, we've got plenty of money on our balance sheet. We understand that the off-takers, they need to provide letters of credit for their shipments. We will have to provide letters of credit to the third-party operators, or perhaps some of them might want to have equity in the project. But the idea for us is it can make we wouldn't have entered into this if it wasn't going to make very good economic sense, and we might share in the economics. But we look, depending on how it pans out, if we can get high enough prices, we may look at just having it on an arm's length contract as opposed to sharing equity.
Okay, so Mount Marion 2, cookie cutter approach.
Hey, it worked last time.
It did. And let's finish off with lithium. The lithium project. How's that going?
Yeah, so look, we are finalising the feasibility study. So it's a bankable feasibility study based on a Class 3 engineering cost study that'll be completed by 30 June. So, that's going along as we expected. The good thing is that the lithium prices are very strong and the outlook is very positive. The cornerstone offtake for that project comes out of our offtake rights that we retain from Mount Marion, but we will need to supplement that with third-party material that we have to buy in the market.
Okay, but tell us more about that. I mean, in terms of the commercialisation and timing and so forth of that project.
Yeah, so look, we're co-funding that with an Indian conglomerate called Manikaran Power. They're part of a larger sort of civil construction conglomerate, but they're the power trading. They're India's third largest power trader. So we're co-funding that evaluation with a view to putting a 20,000 tonne lithium hydroxide refinery into India. In terms of, once we complete the feasibility study, you then have to go through a 12 to 18 month front-end engineering and design, finalise your land or your environmental approvals. You wouldn't be looking to make a development decision until the end of 2022 at the earliest, and generally these plants take a couple of years to build. I mean, it's a 2025 proposition.
Okay. So what we're saying is projects which are sort of dropping from end of next year each year for the next 4-5 years.
Well, you're going to have the battery recycling in the first quarter of next year, Barrambie in the second quarter. You're going to have the Vanadium recovery project in the December quarter. You have 3 projects next year, all things going well, shortly followed by the lithium refinery in terms of FIDs, and then you've got varying construction periods. At this stage, I think we're looking at about 12 months for a battery recycling plant, somewhere about 18 months, Darren, for the vanadium recovery plant, or 2 years.
15 to 18 months, yep.
Yeah, 15 to 18 months. The lithium refineries take a bit longer because they're a larger capital investment. They're large bits of kit. That's a 2-year construction build out. And Barrambie, if you're building a small concentrator, you're looking at probably a 6 to 9 month build for that.
Okay. It's starting to get really interesting for shareholders who've been sort of sitting and supporting you for the past couple of years. So it can actually now get line of sight to the commercialization of these projects.
Yeah, well, you're going to have lots of feasibility studies. So you're going to have, pre-feasibility, bankable feasibility, and so you've got these catalysts, and they're all, got nice, hard, fast OPEX and CAPEX around them. So you're better able to value the impact of what a positive investment decision will be. So I think, out of the 5 projects, to have all 4 of them being able to reach investment decisions, in the next 18 to 24 months, it's a real blessing.
Yeah, it's been interesting sort of watching this or following this the past year or so, where I think people were looking to you guys to actually show that you could move the projects along at a pace, commercialize them, and then obviously, I say line of sight to some sort of revenue flowing here. With regards to, the share price moving recently, people are starting to obviously take notice of this. They're understanding the story better now. Does that sort of turn your head slightly? Because you've got a lot of projects on the go here. Do you start looking for more projects? Do you think, we've cracked this? Let's load up.
I would pose this to you. For the battery recycling, if you're producing nickel, cobalt, lithium at the bottom end of the cost curve, what should you do? You shouldn't look for other projects. You should look for more and more feedstock and build more and more plants. That's your first focus. The vanadium recovery project, we've got a sustainable flow share to deliver us in the first quartile. The lithium hydroxide and Barrambie will invariably be middle to third quartile, right? So, we're all limited by time, we're limited by capital. We want to make sure that we've got the most efficient use. So if, highest return on invested capital in the least amount of time, that leads a bit of a segue into our partnering process. So what we've liked to do is to, identify the trends, get our positions, build that value with the drill bit in the test lab, commercially, whatever, and then to bring in big multi-billion-dollar companies to commercialize these at scales that we couldn't achieve on our own. I mean, we've got $80 million in cash and investments and no debt. I mean, we haven't raised money in 7 years, right? So, it's really, our focus is driven around what is risk return and time.
Okay, here's one for you. You said at the beginning that one of your peers in the US been taken out by a SPAC. You've got some options here. You're feeding into the European ecosystem, so AIM,
sure,
clearly, but if you're seeing what's happening in America with these SPACs and these funds, coming in and looking for ways of deploying capital, are you tempted to go list on another exchange and not necessarily London?
Look, I think each of those businesses is capable of being run, and some of our other businesses that are each capable of living life as separate entities, right? And so if you just said, Chris, you've only got this amount, what do you keep and what do you give a life of its own? The shareholders still own it. And maybe you want to put more money in, or maybe they want to, you get new money in, or maybe you go and borrow money. But it's getting them through those evaluation stages. So we've identified the value, we've quantified the value, we've tried to take as much risk as we can out with the engineering study and the commercial relationships and the commercial arrangements. And then when it comes to executing them, we have positively chosen to get strong partners, right? Like SMS, they build them and they can operate and maintain them, and they've got boatloads of cash, privately owned, 150 years. They can finance whatever they want. And if my biggest problem is financing profitable plants in battery recycling, well, I really haven't got anything to complain about.
No, it's true, but and I do understand that, and that's intelligent. But you're seeing some really crazy valuations in the US at the moment. Are you not tempted to kind of plug into that ecosystem, not just for the financing component, but the valuations being attributed to them?
Yeah, look, I think when is the optimal time to sell? So, we sold our biggest asset, which was an interest in the Mount Marion Lithium-Ion, which is the world's second largest source of hard rock lithium concentrates, when prices were well in excess of what we'd modeled the long-term prices, and we knew that the prices would invariably collapse until the next cycle. So we always got to be cognizant of, you're in the boat, but you got to work out what the tide's doing, right? Because you don't get to low tide and get beached, right? And we're all acutely aware, and we've been through a number of cycles. It doesn't matter how good your asset is. If you're in the bottom of a price cycle, it's nowhere you really want to be with all your shareholders. So, I think we're cognizant where are we in the business's life cycle, and what does the macro and micro look like? And, we're there to make returns for the shareholders, and in our decisions thus far, it's enabled us to share more than $55 million back to the shareholders in dividends and another $6 million in on-market buybacks. So I think, we are vigilant in terms of monitoring where we are in those cycles. And I don't think you can make a reasonable case to say this is the best time to sell a lithium battery recycling business. Once you've got 3 or 4 plants and you've got lots of growth and a dominant market position and that sort of stuff, you could have a different sort of a conversation. But what we've seen, is that developers of these advanced materials and integrated developers of them do get that exposure to this thematic do get exceptional PEs, but you get an exceptional PE when you get earnings. We haven't got earnings at the moment, right? So, we want to get each of those businesses getting earnings, and then you can always sit down and say, mate, I know what a reasonable PE is for this business, and for some reason, if you want to pay me twice the number that's in my head, I might just let you have it.
Great place to leave it. Chris, appreciate the roundup. Congrats on the movement in the share price. It seems to be the momentum's there. Jeremy, as always, and Darren, thank you very much for your contributions. Stay in touch. Let us know how you're getting on. Looks like a ton of stuff coming down the line.
Thank you very much. You keep well.
Thanks, Matt.
Enjoy your new freedom.